risk management. What is risk to reward ratio, right? So risk to reward ratio is basically the amount you're willing to risk versus the amount you will gain if you lose or win that trade, right? So it is pretty simple because you have TradingView provide these tools to actually help you with risk to reward ratio, right? So the red portion here would be my stop loss in a sell, right? And this here would be my stop loss in a buy position, right? So what you're seeing here is, if you look in between right here, you see risk reward ratio 7.78. So what this is saying is, if I'm risking 1% on a specific account, I am actually risking 1% to gain 7.78%, right? Here, if I am selling, right, and my stop loss is here, I am risking 1% to gain 4.27%, right? And it varies. So if you're growing your account based on percentage, right, I have a calculator that you guys can use, that you're gonna put in the risk to reward, not the risk to reward, sorry. You are going to put in the percentage that you're risking on the account, whether it be 1% or 2% or 0.5%, whatever the case may be, right? You put in the amount you're risking and it calculates the lot size that you're supposed to use, but we'll get to that later, right? Now, how is risk management or risk to reward important, right? So if you're looking at a percentage growth, risk to reward is important because the smaller your risk, the more you can gain, right? So if I have a 2 pip stop loss or a 5 pip stop loss per se, if I have a 5 pip stop loss, right? So note, I am aiming for this high here and I have a 5 pip stop loss. Note the risk to reward ratio here is 1 to 11 if I'm risking 1% of this account. However, if I am risking, say I have a 20 pip stop, and I've seen way more than 20 pip stop losses, right? So if I have a 20 pip stop right here, note the distance is the same, but if I stick to my 1%, I'll be risking 1% here to gain only 2.82%, right? So that is why risk to reward is important, and I trade based on risk to reward and percentage only. So I just don't see a setup and say, all right, this looks like a good trade, I'm going to use a 5 lot, or I'm going to use a 10 lot, or this trade doesn't look so good, so I'm going to use a 1 lot, right? It doesn't work that way, right? So if you don't practice proper risk management, then you will not make consistent profit from the Forex market. So yes, you can make profit, but how long before you blow that account, right? Because if you lose a trade, right, sometimes you enter a trade, right, and you just use a lot size based on feelings or based on the trade setup. You think the trade might do well, so you just use a lot size, not realizing that you probably risk maybe 50% of your account, right? So let's look at an example, right? Let's look at an example. So this setup right here, we have this low, we're targeting this low here, right? So looking at this setup, the average trader would probably be using maybe a trend line, right? So we have this trend line here, and best case scenario, right, you get an entry at the retest of the trend line and stop loss above structure, right? That is the average trader. So right here, this is say a 1 to 5, right? So 1 to 5. So if you have a $10,000 account, a 1 to 5 means that you'd be risking, because 1% of 10,000 is 100. So a 1 to 5 means that you'd be risking $100 to gain $500. In this case, you'd be risking 100 to gain only 400 and something dollars, because this is not really 1 to 5, right? So I'm just using 1 to 5. So you'd be risking 100 to gain $500, right? Now, a smart money trader, right? See this. So this is a breaker structure here. We know that market is supposed to retest a premium price. So we look for a valid reason to get a precision entry or a precise entry within this leg right here, right? So if you look closely, we see this candle right here push down and broke structure before this breaker structure here, right? And what do we see here? Market created an OB, right? Left inefficiency. So I highlight this A right here as my point of interest. But this is a 15-minute time frame. What is the 5-minute saying? So we want to walk to our entry time frame, right? On our entry time frame, what do we see? We see a nice order block right here, right? So this would be our entry. So sell right here and stop loss just above the order block right here. Alright, so basically that is a 0.7 pip stop loss, and depending on your broker, so I use IC markets, and IC markets most time Euro USD is like a zero spread, so I'd still be safe if I get a 0.4 pip stop loss. Doesn't matter, right? So if I extend it here, no, this is a 1 to 61, so let's just say I got a 1 to 50. So I got a 0.8 pip stop, right? And I got a 1 to 50. This is the same trade, right? Same target, just different entry and a different risk to reward. So that was a 1 to 5 if you got entry here with stop loss above here. And now I got my entry here and my risk to reward is 1 to 53. That is a drastic change, drastic difference, right? So here I am risking the same 100, right? Because this is a 1 to 50. I am risking the same 100 for 50%, and 50% of 10,000 is what? $5,000. So the average trader will be risking 1% here to gain $500, and I'll be risking the same 1% to gain $5,000. So what this is saying right now, if I should use the pip calculator, the percentage calculator, right, it will tell me what percentage, what lot size I'm supposed to use, right? So let's look at this now. So 1 to 5, right? This is my FX book, guys. So how do you get the position size calculator? Now, where is this X? Got it. What? All right. So here you want to go to home, right? And in the drop down you see forex calculators, right? Across you're gonna see position size calculator. Click on position size calculator here and you get this page right here. So let's continue. So the currency is USD, right? Account size, we have a $10,000 account, right? And the risk to reward is 1, so we're only risking 1%, right? So on the first trade we got, say, was it 15 pips? Hold on, let me check it. So we got the entry here, we extend it all the way to the top. Okay, it was a 9 pip stop. Okay, something like that. So we have a 9 pip stop loss, right? 9 pip stop, and this is Euro USD. Calculate. So note right here it tells us to use a 1.1 pip lot size, right? A 1.1 lot. So if you use a 1.1 lot, obviously that with a 41 pip target, you're gonna get 400 and something dollars, right? So you're gonna get 400 and something dollars. So look at this now. So we have the same account size, we're risking 0.8 pip, risking 1%, sorry, but the stop loss is 0.8 pips, right? Calculate. So this right here is telling us to use a 12 lots, right? So we're supposed to use the 12 lots to get that amount. So we have the same target, we just have different stop loss. So the amount you're risking greatly impact the amount you earn if you're using proper risk management, right? And you don't have to use proper risk management. You don't have to use proper risk management, but how are you gonna stay consistent if you don't, right? So if this person here is supposed to make the same $5,000, right, with this amount of stop loss, with this stop loss here, that person would have to risk $900, right? So imagine risking $900 on a $10,000 account, and you have, say, like 10 losses, right? If you have 10 losses, that's $9,000, right? So in 10 loss, you basically blow your account. I am risking the same 1% with smaller stop losses, and if I lose 10 trades, I only lose 10%. I still have 90%, right? So I can lose 20 trades back to back, which is highly unlikely, very much impossible, right? But let's say we do. Let's say I lose 20 trades back to back. I am only losing 20% of that account, right? And if I lose 20%, in one trade I can get a 1 to 50. So after losing 20 trades, I just win one trade and I am back over I make back that 20% plus 30%, right? So risk management, it basically helps you to stay consistent. And if you start out with, say, risking 1%, you have to stay consistent to that 1% until, say, your account reaches, say, if you want to change it when your account reaches like 10% more, you can change it to less, or you can change it to more. But once you stay consistent to that percentage, then you're gonna be consistent, right? You don't even have to have a positive win rate, right? Because as I said before, if you lose 10 trades in a row and you win one trade with a 1 to 15, then you're still gonna be 5% in profit, right? But let's say you started out risking 1%, right, on a $1,000 account, and you lost a 10%. But because you don't have the discipline, you start to risk 5% because you want to make back that 10%. What if you lose those trades? Your account will just be going faster and faster, right, until you blow that account, right? Because over trading without proper risk management is what blows account. So you have to maintain the discipline, plus you have to maintain the risk management, right? But first you have to get those risk to reward ratio, those 1 to 10, 1 to 20, 1 to 30, 1 to 50, right? And that is what I taught you in this course. So that shouldn't be a problem, right? Gone were the days when people using 10 pip stop, unless it's gold or some indices spare, right? But 10 pip stop loss on it, like Euro USD, joke thing. You don't know what you're doing, right? So yeah, guys, that's basically it for